Okay, next step, FinSC ledger. Very important step. 0L, this is our leading ledger. There is only one leading ledger across the SAP landscape, which is leading ledger. Okay. There are two types of extension ledger, standard and extension. Standard is standard which can be used for example, if your company is dealing in USD, leading ledger can be in USD. While there is another subsidiary reporting in Egyptian pound, so it can make another standard ledger. But if there is a requirement for auditing, and that requires uh, reporting in PKR, okay, then in PKR, then you can make an extension ledger which will follow the standard ledger, because an extension ledger gets the values transactions from a standard ledger. So extension ledger basically is an extension of the standard ledger. And the extension ledger type will be journal entries for valuation differences, line items with technical numbers, no deletion possible, line items with technical numbers, deletion is possible, standard journal entries. So what you will want to keep, it can be for valuation, it can be for journal entries, it can be with line items with deletions if you want to show it for taxation. Okay, for that. Okay, one leading ledger, company code, select this and double click company code settings. And over here, we will have position, DAP. Okay, DAP1. We don't have a local currency. Okay, we don't have a global currency. Fine. That is perfectly fine. Okay. Okay. Posting period variant is DAP1. Parallel accounting using GL is checked, and accounting is GAAP. Functional currency is company code. Okay. Now, currency types. Let's look at global currency, which is MT. But okay, we have an explanation over here. When it comes to currencies, we have 3 and 1. Okay. So 3 in is group currency, which is saying over here, and in valuation 1, which is group valuation. Okay. Now let's see what 31 is and what do we have other than this. We have 11 company code currency and group valuation. So 1 is group in valuation. 20 is controlling area currency, and 0 over here is legal valuation. So we have 3 types of valuation. Okay. So I was talking about global currency. Okay. And we have 31. So 31 is group currency, 3 is group currency, and 1 is group valuation. 11, it is not 11, this is 1, 1. 1 is company code currency and 1 is group valuation. So 2 digits means currency plus valuation. Okay. And group currency is 3 and valuation is 1, which is group valuation. Okay. So why do we need valuation in different? Because for multinational companies that have subsidiaries all around the world, that need to be reported in group currencies, which can be international currency like euro, USD, Japanese yen, Singapore dollar, and things like that. Okay. Also, next step is currency conversion settings for company codes. This is important because this is asked in the interviews. Position DAP1, DAP1 dynamic automobiles. This is 11. Okay. Dynamic auto. Now, what is this? Currency conversion settings for company codes. Now, currency conversion settings. For example, I want to see reports in different currencies. Okay. So what I will do, what I will actually suggest is that I will maintain currencies for reporting like Saudi Riyal, USD. Okay. And that will be translated into Saudi Riyal and USD using document currency. Okay, document currency. 00 is the source. Currency will be document, but it will convert to SAR USD every time because I am hard coding it in the system. Easy. And there are other checks that I am actually issuing over here, and that is standard translation of the currency. Standard translation means standard translation at average rate, yani, which means on the day it will apply the exchange rate based on what criteria? Criteria is posting date, translation date, document date, posting date. Okay. So translation date is that date when you enter the currency exchange rate. So it can be 1st January, it can be 30th June, whatever. It can be daily, it can be monthly. And document date, the date document was entered in the system. But posting is date is when SAP posts, and the influence of the entry, the effect of the entry is recorded, and it is real-time conversion. It happens on the real time. Okay, so you can maintain multiple currencies. Okay. Now, next step is, let me save it. So how do we reach at this ledger area? I go to SPRO, reference IMG, financial accounting, global settings, financial accounting, global setting, ledgers, ledger, define settings for ledger and currency types. This is a very difficult area, but I have actually explained it in very easy terms so that you don't find any confusion. Okay. So this is how you actually it is showing in SPRO, but it's original FinSC, FinSC underscore ledger. This is the T code. Okay. Now, let's get back to SPRO and get to the next level, which is very interesting. Definition, controlling, maintain controlling area. Yes, controlling area is very important. Maintain controlling area. Double click maintain controlling area. Enter new entries. Select this controlling area, DAP1. Okay, dynamic automobiles tap, currency type 10. But over here, because we are configuring controlling area, currency type will not be 10, it will be 30. 30 is 3 is group currency, 0 valuation. 0 is legal valuation, USD. Because company code currency is SAR, which is Saudi Riyal, but reporting currency will be USD. Leading financial statement version INT. Okay. Save. Cross company code, because we'll be making another company code as well. Okay, this is saved. Now, let me explain. Let me give an explanation over here. Company structure in SAP, for example, manufacturing. It's a manufacturing company. Let's suppose it's making toys, SUVs, and passenger vehicles. Okay, that's our company, DAP. Okay. So the company is in Sharjah, and in our case, it's in Riyadh because it's in Saudi Arabia. Warehouse is also in Riyadh. Okay. Distribution centers. Now, what are distribution centers? Let me explain that. Sales office segment will be toys, mechanos, export is another. Now, segment is business niche or business vertical. Business vertical or niche that you are in, or business service. Okay. The product or the service. Okay. So this is your niche. And you are into SUVs and passenger vehicles. Plant is in Riyadh. Okay. Not Sharjah. Segment, of course, now segment reporting is mandated by accounting bodies like GAAP and IAS. They want segment reporting, and profit centers can increase. Now, what are profit centers? What are segments in SAP? So in SAP, you first define the mother company, okay? And then you actually define a company code. So mother company, like we have DAP1. Company code is DAP1, okay? This can be DAP only, but this will be in USD because this is mother company. And company code DAP1 is in SAR, Saudi Riyal, okay? And company code currency will be SAR, okay? Transaction currencies can be any, okay? Because transaction will be happening with vendors, with customers from all around the world in dirhams, SAR, Saudi Riyal, USD, Euro, Indian rupees, whatever. So what we do is we actually make and define master data. Master data is what? Master data of company code. Company code is DAP1. Then we define chart of accounts. And then in chart of accounts, we define account groups like assets, expense, income, liabilities. And then comes retained earnings in the same chart of accounts. Then we create master data of plant, purchase organization, sales areas, distribution centers, sales offices. And then we integrate company code with plant, sales org, purchase org. Okay. And when we define plant and sales org, we define organizational units reporting to plant and reporting to sales org respectively. So plant controls purchase organizations, location, and storage location. Okay. Sales org controls distribution centers, sales offices, sales areas. Okay. Now comes the controlling area that we were configuring right now. So mother company, which is DAP1, okay, DAP1, it controls controlling area. What comes in controlling area? Profit center accounting, segment reporting, cost center accounting, costing, product material planning. And in controlling comes segment. Segment controls profit centers. Okay. Profit centers can be your distribution centers that we defined in sales org. Okay. Can be. It's up to the discretion of your customer, of your client. Segment can be your business niche or business vertical. Okay. And what is our business vertical over here? SUV, passenger vehicles, and toys. Okay. So this is how you define a segment. Under that segment comes profit center, and under a profit center comes a cost center. So we have kept controlling area currency group currency, which is 3, 0, in which 3 is group currency and valuation is legal 0. Okay. I hope you get the point. So valuation, when it comes to valuation, legal is symbolized with 0, group is symbolized with 1, profit center is symbolized with 2. In company code currency, we have, this is valuation. Currency is different. So company code currency is 1, profit center currency is 2, which is also controlling area currency, and group currency is 3. And this is the hierarchy. Mother company, controlling area, company code, and under company code comes plant, sales or purchase or personnel area, which is from HCM. And CO is basically management accounting, which gets entries from FI, MM, SD, PP, HCM, PM, WM, CO, and many other modules. So CO is a very central module to learn. Okay. If you master this module along with production planning, you can be a master in your landscape in SAP. Okay. Got it? Yeah. So I have saved this. Now, next is, I've already saved this. Let me save it again. So let me make sure that we are into. So this is 30 is group currency. I'm sure you're clear on this now. This is the most complex area to be asked in interview, but we have made it very simple. Next step is OKKP. OKKP. What is OKKP? OKKP is nothing but some controlling area settings. DAP1. Double click. Currency valuation profile. Currency type is 30. Exchange rate type will be M. Chart of accounts is DAP1. Cost center hierarchy will be standard hierarchy. Not necessary, you can keep any name. Then I will go to this folder. It will ask me if you want us to create standard hierarchy for cost centers. I say, okay, yes. New entries. This will be 2023. Component of cost centers will be active. Order will be active. Projects, sales object, cost objects, active. Commitment management, no. Activity-based costing for panel calculation, not active. Profitability analysis should be costing based. Save. And variances should also be saved. We cannot save that. Okay. Continue. I hope this is clear. Variances, yes, we will also calculate variances as well. Okay, saved. Next step. Assignment of company codes. Next step. New entries to the DAP1. Dynamic automobile. So any company, multiple company codes can be assigned to a controlling area. So this is the hierarchy that I showed over here. Controlling area controls company code. So relationship is one to many, but the condition is same chart of account and same fiscal year, only then controlling area will accept it. Okay. Okay. It's fair enough. Now, the saved SPRO, IMG, controlling, general controlling, organization, maintain versions, very important. Now, this version is basically requires another set of explanation. Okay, versions. Now, what are versions? 0, 1, 2, and so on. 900, 901, 909. In 0, what do we have? Planned values, actual values, WIP. Now, what is planned values? Now, since we are making toys, for example, toys. So planned toys. So planned will be, what will be planned? Production, material, overheads, wastage, labor hours, attendance, byproducts, WIP, work in process. This is planned. So we will plan the production. We will give, okay, 1,000 units. Material, 100 tons will be needed. Overheads, this time it will be 30,000 Saudi Riyal. Wastage, 7,000. Labor hours, let's forget attendance. Labor hours will be 15, 14,000. Byproducts will be 330. WIP expected is 8033. Okay. So this is planned. Then comes actual. Actual will mean planned versus actual. Let's keep it here. Planned versus actual. In actual, what happened? We realized only 990 products. Material used was 130 tons. Overheads were 33,000. Wastage was high. Labor hours was 16,000. And byproducts were, let's say, 2,000. And WIP is, for example, 6,000. So yeah, the production manager, the CFO will sit and see, oh, what happened? We are short of 10 and we predicted 100 tons of material to be used, but 130. So, and overheads were calculated, but 3,000 was excess. Wastage was 9,000. Labor hours were more. Byproducts were less. WIP was also less, which is also good, but of course, why? So this Y is basically the variances. Okay. you actually sit down with the team and they give you an explanation. Okay. So this plan versus actual can be saved in version 0. Now, version 0 in simple terms can be like your register, okay? Like a ledger, like a register that you're maintaining. So in version 0, you will have all this. It will also capture plan plus actual and work in process. Plan version 1 will only capture actual. Plan 2 will capture only what? Only work in process. 900, 901, 909. This is for worst case scenario. This is for normal case scenario. And this is best case scenario. Okay. So this is how you create um, um, scenarios, and that can be again evaluated on profit center or group or forecast or progress version, anything. So we'll go to 0 and controlling area settings. It is 0 plan actual version, and we'll go for settings for each fiscal year. Integrated planning, double click. LP01, okay. Execute, okay, fine. We have go to SPRO again, IMG, controlling, general controlling, organizations, maintain versions. Come on. 0 controlling area settings. Oh, LP9. This is not our. So we'll change it. Okay, S DAP1 SPRO. Is getting slow now. Let's stop our lecture.